Good morning, ladies and gentlemen. This is Butch Shurak, Options University. It's Monday, December 31st, 2012, the last trading day of the year. With that thought in mind, let's go ahead and take a look, and access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. Let's take a look at the week that was, as we see that as we look at all of our changes for the week, all we see there is big negative numbers. The Christmas rally has failed to materialize, and the fiscal cliff dominates the news. When it's all said and done, a day can float anywhere depending on the latest news that pops out of some politician's mouth, and we see the market go up, go down, flip around, and it's just been as fickle as can be. For the week, the Dow's down 252 points, almost 2%. NASDAQ down 2%, down 60 points. S&P down almost 2%, down 27 points. Russell 2000 down 2%, down 15 points. And what we saw on Friday was we saw the market dive as we went through the last half hour and looking for news that could bolster this market, and we'll see whether we get any before the end of the year. They're in Washington right now trying to make these decisions. What do we have on Monday, December 31st? Not much. Not much happening. A little bit of news at 10:30. Tuesday, January 1st, begin the new year with a vacation. And then we come to Wednesday, January 2nd. We've got 2 more days left for the Christmas rally to take place. We'll see whether it happens or not. PMI manufacturing taking place at 8:58. ISM manufacturing showing up at 10 o'clock. On Thursday, we've got ADP employment report and jobless claims, which we have every Thursday morning. Come Friday, we got the employment situation for the entire month. What will that number come out to be as we see the market wanting to rebound, wanting to head up, but fiscal cliff dominating the news. ISM non-manufacturing will take place on Friday around 10 o'clock, and we'll continue on with the week. Let's take a look and see what we had for the last week. There's our Christmas rally. The cycle is absolutely down. Look at that big red candlestick on Friday. Look like we might have a rally off that what looks like a hammer on Thursday, but no, it just went down all day long and closed hard at the end of the day. 200-day moving average sitting certainly within reach. 30 looks like it's ready to cross the 50. Will it happen? It all depends on what kind of news we get out of Washington. Looking at the month as we see it, we saw 1, 2, 3, 4, 5, 6 down days in a row as the market is telling what they think of what's happening with the fiscal cliff. All right, let's take a look at the Dow and see what the Dow's done. And we see the Dow followed the same pattern, although the Dow trading below that magic 13,000 number and below the 200-day moving average, the 50-day moving average, and the 30-day moving average. Dow not showing us any leadership whatsoever to the upside, as all of this uncertainty the market doesn't like. Looking at the NASDAQ, we see it too was down almost 2% for the week, and we see that we continue waiting for Washington to come up with some kind of news to tell us where is business going to go as we enter into our next year. Can't get the representatives and the senators to get together and do their job. Russell 2000 also down, but notice at least with the Russell 2000, we have the 30 above the 50, which is above the 200, showing strength, and particularly in the month of January, we usually see the Russell doing quite well. Overall trend for the Russell for the last couple months has been up. We'll see whether it kicks in and continues on up after we get this fiscal news and get this out of our past and start to deal again with somewhat normal markets. If we look at the VIX, boy, did we have a spike on Friday as it went up almost 3 points, and we see that it was actually up 3 1/4 as we see fear coming into the market as we saw it break out of that normal trading range between 20 and 15. So a little bit of fear as we are approaching the deadline for the fiscal cliff. Looking at our bond market, look at where we are for the year. Started the year way down there, ended the year up there, had a higher point during the year, but at this point, as we look at just this one area, we see that we've been in a bit of an uptrend during the last week as the market was pulling back, much of what we would expect. Next, looking at the financials, we see that they reached a high point just recently as we saw QE3 providing some impetus for the financials to continue on their comeback trail. Now we'll see what happens as the fiscal cliff becomes the major news article. Looking at oil, we see that compared to the beginning of the year, oil was lower as we go into the end of the year, and we're trading in a very tight range between these two levels, and we'll see what this market does after we get some kind of news out of Washington that does make sense. Looking at gold, we see that our safe haven reached a second high, almost as high as it was at the beginning of the year, but we see we've been steadily pulling back on the price of gold, and we'll see where that heads once we get back to some real markets. We're sitting basically at the 200-day moving average. We've got the 30 below the 50, so we're showing a bit of a downtrend in gold over the last 6 weeks. Okay, and if we look at volume, what kind of volume did we have on Friday? Pretty good steady volume as we saw this thing just keep pulling back a little bit further and a little bit further, waiting for that news. As we look at the market in the opening on Monday morning, we see the S&P down approximately 26 points. So you're not exactly excited about what we're hearing out of Washington. Well, that is the week to watch, and that's the way the year has looked, and we're at the end of the year. We're looking for that Santa Claus rally. Didn't get a Santa Claus rally. Still have a couple days to get it, but it will take news out of Washington to get our market to run and give us a positive number. Remember, as January goes, many times it tells us the way the rest of the year is going. For those of you that are gold members, stick around. We've got stocks to watch. We'll be happy to go through it. For those of you that are not gold members, thank you for being here. This is Butch Shorak Options University. Monday, December 31st, 2012, a shortened trading day and a holiday for the first of the year. So, again, thank you very much for being here and being here during the last year. Wishing you a happy new year. And to our gold members, welcome back. It's Monday, December 31st, the last trading of the year. And let's take a look and see exactly what we're headed for as we head into the new year. We see that our trend, or at least our cycle for the last 5, 6, 7 days has been a down cycle in basically a sideways trending market, depending upon what your trading frame is. If we look at just the last 6 weeks, we certainly have been an uptrend. Started well below the 200-day moving average. We got higher lows and higher highs, but now you see as we're tracing back, that 200-day moving average is well within reach. As we saw Friday, the sell-off just about as hard as a market could sell off in the last 20 minutes. So we see that the market looks distressed over the fiscal cliff. Where is the market going Monday? Gosh, nobody knows. It's a market that is dominated by news, and whatever senator or representative says makes the next utterance, that's the way the market moves. Looking at the year, as we see, we've had quite a year. Amazon certainly has outproduced the market. As we see, it had a triple top there, and they're sitting with the 30 above the 50, above the 200. As we see, it's sitting right about at that 50-day moving average, or the 30-day moving average as we look at it. And it has had quite a year, as we see Amazon certainly being one of the leaders in the market. Next, we take a look at Apple, and we saw that it had its previous high there in September, and we see now we're in that trading range, but look at, we dropped below some of those support lines as the year has gone by, and we'll see whether we're headed lower as the fiscal cliff and the first year of the Obama administration could end up with some kind of a negative year. Watch this first week of January to determine where we're at. Where's it going to go? Well, all these things are going to be dominated by the news of the fiscal cliff, so we really don't know where we're going until we get this thing settled. Market moves much every day. AutoZone, we see that it's dropped below its normal trading range, and we'll see whether it jerks up if we get good news out of Washington. Looking at its CMG, we see it's much lower than it was earlier in the year, as we've seen quite a pullback out of CMG as news and earnings have dominated this stock. Currently sitting at a point of resistance. Which way will it go? Which way is the market going to go? And it will be much easier to answer that question. Looking at Google, we saw that Google had quite a run during the summer, went up and hit all-time highs, and now has pulled back to, well, at one point pulled back to the 200-day moving average. Now we're looking for that 30-50 crossover with the 200. This stock could go back to those previous highs if we get some cooperation out of the market. Looking at GMCR, Green Mountain Coffee, it was a year dominated by news as we had earnings and talk of scandals, and it shoved that stock down. Those earnings didn't help it at all. Finally, in the last quarter, we got some good news out of Green Mountain Coffee as we see it headed back towards some of its previous highs. All right, looking at ISRG, we had a real runner as we went into the year. Ran all the way through April, kind of went sideways after that, and then it just takes one bad news out of earnings and it changes the complexion of a stock. Tried to work its way back up and was doing fine, and all of a sudden we see it pulling back into this previous yellow trading range. Earnings coming up here shortly towards the end of January, so we'll see what they have to say as we go into earnings on ISRG here shortly. Certainly one of the stocks that led the market up. Look at that nice uptrend as we got the 30 above the 50 above the 200 for MasterCard, as we see that this is a stock that gets good news out of QE3, reaching all-time highs just a few short days ago. All right, McDonald's pulling back with the overall economy and getting lower highs, lower lows. We'll see whether we pull back even further, looking for lower lows down here. And then, of course, we've got earnings coming up, which, of course, will change everything in a stock if we just get certain news out of the earnings. Nike had those kind of news out of the earnings, had a 2-for-1 stock split, and we see that Nike is sitting up there with a gap that has not yet been filled. Fiscal cliff doesn't give us some kind of news. This gap could be filled fairly quick, as we'll see which way the market knee-jerk reacts as we're waiting for that news out of Washington. Seems to be a recurring theme in what I'm telling you about, and that's exactly what we're looking at. Market's on hold till we find out where it's going. Price line, we see the price line trading within that yellow zone, going sideways. Certainly they like those earnings which took place last quarter. They didn't like those earnings which took place the quarter before. So price line looking for the strength to regain some of its prior strength, that this stock was a runner. All right, we'll see what happens. Again, fiscal cliff. Where are we going? What's the market going to do? What's the economy going to do? Cyclically, first year of a second term on a president is not usually a big move up. Watch January carefully. It gives you an indication of the rest of the year. No Christmas rally this year with the news depending on the fiscal cliff. And WW Grainger back up into its yellow zone where it's been trading, and we'll see what happens with this stock, as it's one of the steady stocks in the market with just kind of good old solid business taking place. Watch this stock, as it certainly has the potential to go up and reach its previous highs if we get some kind of fiscal cliff, some kind of answer on what's going to take place here. If we get a delay and they decide to do a very short-term 30-day fix on the fiscal cliff, we're going to spend the next 30 days with this kind of indecision. Market doesn't like indecision. Corporate executives don't like indecision. And we need Washington to do its job so that we can continue to do what we do, and that is trade the markets with trends and with an idea of where things are going. Remember, news overpowers everything. So as we end the year 2012, we're in an area where there are a lot of questions, a lot going on, and we'll see what happens. I wish you all a very happy new year. This is Butch Shorak, Options University. It's Monday, December 31st, 2012, and the future of the market depends on whether we get some answers out of Washington. Thank you for being here.